Good morning, everyone, and welcome to the Morning Market Review. It's Tuesday, it's the 27th of June. My name's Russell Shaw. I'm a Senior Market Specialist at FXCM, and my email address rshaw@fxcm.com. I'm just going to go ahead and bring up our disclaimers, and we'll keep these on screen for a few moments. We'll start off with a high-risk investment warning. Good morning, Kim, Mia, and Howard. Lovely to have you on the webinar. Thank you very much for joining. Thank you, everyone, for signing in this morning. It is terrific. Very much appreciated. Mia, I saw your email with regards to high plus low divided by 2. I'll show you what that means in this webinar. All right, here's the market commentaries disclaimer. Our references MarketScope 2.0 and TradingView. All right, let's go through to MarketScope first. Here's the dollar. So the dollar, to me, is quite challenging. I'm not surprised it's challenging. It's challenging because we're consolidating, which we've said many times is moving in that symmetrical triangle. I thought that perhaps with the geopolitical turn on Saturday, when we had the Wagner Group heading towards Moscow, I thought there might be some movement into the dollar as a safe haven. That hasn't materialized. You can see that we've actually got dollar coming down. So that's interesting. It's interesting. We're still very much in no man's land, and as long as we're in no man's land with the dollar, it's going to be challenging. But we'll take a look and see how the other currencies are trading against the dollar. See if we can make some sense using the other Forex pairs. Just before I move on, I want to just show you guys the RSI setting they use. So I'm just going to double click on the RSI. So I use a 10, and then I use the median. So the median, so I don't calculate it on the close, which normal RSIs will get, or standard RSIs would be calculated on the close. I use a median, just smooths it a bit, high plus low divided by 2. I hope that answers the question. Yeah, so it's a 10 with the median. All right. Before we get to the other currency analysis, I want to show you guys something that's very interesting. If you've been listening to the sort of pundits, analysts, you may have heard that the S&P, which is in uptrend, is being driven by only a few stocks, which I would agree. So we've got on the S&P 500 higher trough followed by a higher peak, a higher trough 2, followed by higher peak 2, and you can see that the S&P 500 by and large is moving in an uptrend. What I have heard is that the uptrend is being driven only by your say your Facebook, Apple type of stocks, just very few stocks pushing the index higher. And I think it's worth mentioning two things around that. First of all, there is a methodology to the way the S&P 500 is calculated. It's calculated on what we call a market cap basis. So as companies' market capitalizations change over time, it will tend to influence the S&P 500, giving more weight to the companies that have the higher market capitalization. Well, that makes it a momentum index. So of course it's going to be driven by the stocks that have the highest momentum. Okay, so that's the first thing to say about that. The second thing to say about that is that there is another instrument out there called the Invesco S&P 500 Equal Weight ETF. So here, instead of weighting it by market cap, every constituent of the S&P 500 is weighted equally. So I've got the equal weighting on top. I've got the normal S&P 500 at the bottom, and you can see the difference. You can see the difference here. So there's no doubt that the S&P 500 is being influenced by the higher weighted market capitalization stocks. That's plain to see. But when we take a look at the equal weight, I think this is a positive looking chart as well. Yes, it hasn't taken out this peak over here. I can see it hasn't taken out that peak, whereas the normal S&P 500 has. But we do have an uptrend. Nevertheless, we do have an uptrend. Let's put in our peaks and troughs. Trough. Peak. There you can see it's the higher trough. Okay, and then of course here's the higher peak. Well, once you've got a higher trough followed by a higher peak, there's your uptrend. So even the equal weighted is trending up. The difference is that we've got a resistance, an overhead resistance here. So we'll see how the equal weight index handles that resistance. But despite that, the way that the S&P 500 is calculated is naturally going to gravitate towards momentum, and the higher weighted market capitalizations that are doing well are going to push to the top. So yes, there is a difference between the two. I don't see the equal weighted being in downtrend, so we'll just have to continue to see how the equal weighted index continues to behave. All right. What I said was the US dollar proving to be quite challenging because it's moving in a sideways pattern. Even the RSI is chopping, it's oscillating around 50. Let's see what's happening with regards to cable and the euro. So let's see how cable is behaving first. Okay, so whereas the US dollar is trending sideways, cable's not. Cable's actually trending up. Again, higher trough, higher peak. So what I think could be happening here, whilst we're talking about the dollar as being a safe haven, there could be more of just standard fundamentals at work here. What am I talking about standard fundamentals? Well, just take your 2-year gilt from, so the UK 2-year gilt, and subtract from that the US 2-year note, and we can see what's happening in terms of the relative spread, the relative monetary policies, because the 2-year is a very good indication of how the respective central banks are behaving. And you can see that the Bank of England here is the more aggressive. How do I know that? Because the spread is in favor of the gilt over the spread of the gilt is favored over, I beg your pardon, the yield of the 2-year gilt is favored in relative to the 2-year note. And if that's the case, it seems that cable is benefiting from that. In other words, the fact that the Bank of England is the more aggressive of the central banks seems to be pulling capital towards pound US dollar. And that's why, whilst the US dollar basket seems to be floundering, moving sideways, well, cable, on the other hand, seems to be moving quite nicely upwards. Okay, so you can see the similarities between the two charts there. Okay. What we can do is we can do a similar analysis with the euro. So let's take a look at euro. And you can see here the series of higher troughs followed by higher peaks. The euro gets very interesting over here. We've got a higher trough that's locked in. We don't have the higher peak. Okay, so it looks as if we're still in this impulse move here. And if you take a look at the RSI, it's nicely above 50. As long as it holds above 50, we're going to have that underlying momentum, and that should support the euro US dollar. But what's happening with the spread between, and we're going to use the German 2-year here as the proxy for the Eurozone. And let's bring that up. Okay, and let's go ahead and let's bring up the euro US dollar underneath. Okay, so this is quite interesting. You can see, let's put in some peaks and troughs here. Let's put in the reference trough here for the spread, and we'll put in the reference trough slightly backwards for the euro. And here it starts moving quite nicely. Here's the reference peak. Here's the reference peak. So take a look how closely correlated the spread between the 2-year fixed income instruments are. Here's the higher trough. Okay, here's the higher trough as well. Here's the higher peak, which matches with the higher peak over here for the euro. And then this is where we are at the moment. We've got HT, I'll put star, so that's the latest higher trough. Well, guess what? Here's HT star, the latest higher trough. So it's moving very closely in terms of a relationship between the spread. So what's interesting here is that the dollar as a safe haven at the moment hasn't quite caught the imagination of the market participants. Yesterday, we did see the market come off. When I say the market, stock market, so you take a look at the NASDAQ. NASDAQ came down. One would expect money to flow into the dollar potentially as the counter. That didn't happen. So here you can see NASDAQ coming down. This is the weekly. We're still overbought, but it's starting to normalize. And that's what we said. We said that this RSI is going to normalize at some stage. It looks like the normalization has started. You go through to the daily chart here, you can see how it really had a strong down day yesterday. And one would have looked at the US dollar. I would have looked at the US dollar to see some sort of contra type of move. Didn't quite see it. Didn't quite see it. On the contrary, you saw that other instruments were moving. So we've got a little bit of blue. It's more of a doji style, yeah, but a little bit of blue on the euro. Let's take a look at the cable pairing. Okay, some blue there. And I think the idea here is, as long as we get a relative hawkishness in terms of Bank of England, in terms of ECB, then there is potential support for euro and pound. So let's just keep an eye on that. The big bugbear, okay, the big bugbear at the moment is the US dollar. And the reason that it's a bugbear is because it's in no man's land. Okay, it's moving in that sideways direction. Moving sideways, very difficult to get a directional bead on it because, well, it's moving sideways. It's not trending up, it's not trending down. So we're going to have to continue to monitor the breakout for the US dollar. But I just felt that it was behaving slightly strangely yesterday, a little bit different to how I would have expected it. So I want to keep an eye on that. Let's just end off with the DAX, just to see how the DAX is tracking. Okay, so what we're doing here is we are looking at the latest swing in terms of the trough over there, the peak over here. And what we want to do is monitor to see if we get a higher trough or a lower peak. By and large, we've been moving sideways over the last 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. So no real gains made on the DAX over the last 9 weeks. If we take a look at it in terms of the daily chart, we are biased towards the downside. We're in zone 3. Take a look at yesterday's candle. Yesterday's candle's a long-legged doji. Okay, in other words, bears did try to take price down, bears try to take price up, effectively flat on the session, but we're still in zone 3. We're still in zone 3. And let's just go down to the hourly chart and see what's happening here on the hourly chart. And I think given that there is a sideways movement on the weekly, given that there is a zone 3 position on the daily, I think we would be within our rights to look at R1 as a potential resistance area. So I'll just keep an eye on this and see if we get the crossover to the downside over here. See if we get the crossover to the downside over here. And if we get those, let's see if the momentum materializes. So just to reiterate, the dollar acting a little strangely. I think the relative hawkishness between regional central banks are coming into play here. There does seem to be a normalization of an overbought condition that could put pressure on risk. Given that, take a look at DAX. DAX is at R1 resistance. Do we get the crossover there? So that's where we will go as far as this morning. If there's any questions, please go ahead and type those in. If there's any questions, go ahead and type those in. But I'd look to see if R1 holds on the DAX. All right, nothing coming through. So let's wrap up here, guys. Tomorrow we'll do the morning market review and we will do a crypto minute. Thanks very much, guys. Cheers.